A very good morning, class 12. Today in this video you are going to learn about the third method of calculating the national income, that is expenditure method. Well children, according to this method, national income is measured in terms of expenditure on the purchase of final goods and services produced in the country during an accounting year. Now, as the final expenditure actually includes consumption and investment, that is C and I, so this method is also known as consumption and investment method or income disposal method. Now let's see what is the classification of this final expenditure. So see, this final expenditure has been classified into final consumption expenditure and final investment expenditure. Now this final consumption expenditure is further classified as private final consumption expenditure and government final consumption expenditure, whereas the final investment expenditure is further classified as gross domestic capital formation and net export. This gross domestic capital formation is further classified as the fixed investment and inventory investment, or you can say change in stock. Now let me explain you each component of the final expenditure one by one. So we start with the first one, that is the private final consumption expenditure. Now when we talk about this, then children, it refers to expenditure on final goods and services by the individuals, households and non-profit private institutions which are serving the society, like helpage, which includes the consumer services, then the consumer non-durable goods, that is the goods which are not repeatedly used like butter or milk, then consumer durable goods which are repeatedly used for several years like furniture, television, washing machine and so on. If we talk about the next component, that is the government final consumption expenditure G, then children, it refers to that expenditure on final goods and services by the government, like the expenditure on the purchase of goods for consumption of let's say for consumption by the defense personnel. So it includes those goods and services. Now if we talk about the final investment expenditure, so children, this I, it refers to that expenditure on the purchase of final goods by the producer, means it includes that expenditure which is done by the producer when the producer purchased those goods for the purpose of further production. Let's say for example, expenditure by farmer on the purchase of a tractor. So this is an investment expenditure because he is going to do the further production with that. So this investment expenditure is classified as fixed investment. Fixed investment, children, refer to that expenditure by the producer which is done on the purchase of fixed assets like plant and machinery. Now this plant and machinery is a fixed investment. Now economists have classified this fixed investment into business fixed investment done for the purpose of business, then fixed investment by the household, and even the household, they do the fixed investment like a construction of a house which is a fixed investment, then public fixed investment or fixed investment by the government, means when the government do expenditure on the construction of roads or bridges, dams, then that is a public fixed investment. And when we talk about change in stock or inventory stock, means it is actually estimated as the difference between closing stock of the year and opening stock of the year, right? Then comes the last one, that is net export, which is X minus M. So that is export minus import. So children, when we talk about net export, it actually means the difference between exports and imports during an accounting year. Now here exports are the expenditure by the foreigners on the domestically produced final goods and services. When the foreigners they purchase our final goods, domestically produced final goods and services, while imports are expenditure on the goods and services which have been produced in abroad. So children, expenditure on the domestically produced goods and services is added to the total expenditure in the economy during an accounting year, and expenditure on import is deducted. Okay, so this adjustment of adding up and deducting is very necessary for the estimation of the expenditure on the domestically produced goods and services. So the total of expenditure on the domestically produced goods and services during an accounting year is actually called gross domestic product at market price, that is GDP at market price. Now if we have to come at national income, then we need to convert GDP into NNP at factor cost, that is the net national product, which is actually a national income. Now let's see what is the measurement of national income using the expenditure method. Means you need to remember this chart which shows that which are the items which are to be added up under the expenditure method and which are to be deducted to come towards the national income. So over here if you can see, to come towards the GDP at market price, children, remember you need to take private final consumption expenditure, in it add government final consumption expenditure, then gross domestic fixed capital formation. When I say gross domestic fixed capital formation, so remember you need to add fixed investment also, inventory investment also, then change in stock, and the last is net export, that is export minus import. When you add all this together, children, you get gross domestic product at market price, that is GDP at MP. And from this GDP at MP, if you deduct depreciation, you are able to reach towards NDP at MP, that is net domestic product at market price. And from net domestic product at market price, if you deduct net indirect taxes, children, you get net domestic product at factor cost, that is NDP at FC. Now in this NDP at FC, if you add NFIA, that is net factor income from abroad, you are able to reach towards NNP at factor cost, that is net national product at factor cost, which is actually a national income. So children, this is the measurement of expenditure method. You need to thoroughly go through it so that when you do the numericals on expenditure method, you are easily able to attempt them, keeping in mind which items are to be added up and which items to be deducted to reach towards the required. Now this is how you can measure the expenditure method